Welcome to our quarterly update on our cash and income funds. In our previous updates, we mentioned that central banks around the world, including the South African Reserve Bank, have been making efforts to control inflation. While sticky core inflation is reported to be slowing the progress of global headline disinflation, many major central banks' interest rates plateaued in the most recent decision announcements in April and May. This is the case as well in South Africa, because as per the latest print, South Africa's annual inflation rate remained at 5.2%. Although the latest figure is a 4-month low, interest rates remain elevated and the central bank maintains a cautious outlook on the pace of disinflation. The risks identified to the inflation trajectory identified in March were food inflation, exchange rate, and oil prices. By May, the assessment of the risks had changed to broadly balanced, meaning that the risks were no longer predominantly expected to drive up inflation. Instead, they were seen as having a more neutral effect with equal chances of either increasing or decreasing inflation. Furthermore, the South African Reserve Bank noted that expectations remain broadly intact for a lowering in interest rates to commence this year. Given this backdrop, let us see how our cash and income funds performed. The first of these solutions is the Momentum Money Market Fund. This fund is for those investors who have short-term financial goals who prioritize the preservation of capital and prefer low-risk investments. With potential rate cuts expected in 2024, the fixed income team saw a steepened money market curve on the 1-year point. This indicated higher interest rates for 1-year investments, so to boost returns, they added 1-year fixed deposits and treasury bills to their portfolio. Depicted on screen is the result of entering this position. The money market fund performed better than the benchmark as well as the competitor average in the past 3 months. This outperformance extends to the other periods of assessment shown on screen. Using CPI data and global trends to recognize these opportunities has proven beneficial to investors. The second cash and income solution is the Momentum Enhanced Yield Fund. This is quite similar to the money market fund, but has a wider investable universe, with credit instruments being the return enhancer in the fund. It is suitable for investors who value safety, liquidity, and a modest income. Like the money market fund, elevated 1-year NCDs and treasury bills were good performance driver for the Momentum Enhanced Yield Fund. On screen is the fund's performance over various periods. The Momentum Enhanced Yield Fund outperformed its benchmark but lagged slightly compared to the peer group. The credit market was muted leading up to the national elections in May 2024, and even though there were instances where the fixed income team successfully extended their debt investments at better than expected interest rates, the main detractor was maturing credit with no option to extend at attractive rates or spreads, and the scarcity of yield-enhancing credit opportunities during the second quarter of 2024. Lastly, we have the Momentum Flexible Income Fund. This fund is suitable for investors who seek maximum exposure to income-generating instruments across the fixed income landscape. South African bond yields were caught between large global macros like the Federal Reserve's rate outlook and an uncertain SA election outcome. However, they made a comeback this quarter. The main change to the portfolio was moving to a higher duration position in SA nominal and inflation-linked bonds in instances where they were undervalued. We mentioned in the previous update that we exited the equity position in March. However, we should have reallocated to property again in June, as property was a strong driver of returns last year and in the first quarter of 2024. The 3-year figure still reflects the difficult time that bonds had in the past 3 years. However, the 1- and 3-month figures reflect their comeback. In the past quarter, the Momentum Flexible Fund outperformed both its benchmark and its peer group. The Momentum Flexible Fund also turned 5 years old in June. Reaching the 5-year mark is an important milestone for a fund, offering a more substantial performance history, increased credibility, and comparability. Over the past 3 months, we navigated a dynamic market environment, achieved a key milestone, and continued in our efforts to optimize returns for our investors. We appreciate your trust and investment in our funds and look forward to continuing to deliver value. Thank you for your ongoing support.